But there might be this phase of the dollar all of a sudden taking a severe leg higher when we see reserves dry up at the Fed due to QT, and them not starting to slow down yet in September. And September is going to be, for me, a pretty dangerous month for that. But let's see what happens. And I don't know. To be fair, I don't know yet what's going to happen when they signal a real pivot, because I don't think they will signal a pivot to lower rates straight away, because that's not the way the Fed has been communicating.
Yeah.
We've seen since what was it, May, June last year, and they've all said we are too late on. Oh, somebody's saying that the YouTube stream has stopped. I don't know what to do about that, Nick. I'm sorry. So I lost my line of thought there. What was I saying? No, so I think I don't think that they will signal a pivot yet. Yes, because they started to signal in May, June 2021 the change from ultra loose policy to perhaps we will have to do something about stuff, and they all admitted that they were late afterwards. But fact is, it took them like months before really starting to act. So they will want to prepare the markets. The last thing that the Fed wants to do is to completely disorient markets. So I think we will have to go through the QT phase, and then they might start to signal while QT is still going on. Then they might start to signal some hold of the rate hikes. Probably going to go like more data dependent, whatever, yada yada yada, and no need for 50s or 75s anymore. But to signal a pivot is going to be a bit early. So I really don't know how the market will react. It's probably, like you say, they will try to go hard the other way around, try to sell dollars and try to put yields lower. But then the inflation will start to show again, and we will have a lot of data in between, right? We will have a lot of data in between. The thing as well, which I wanted to stress again, is that to me, yes, all central banks are reacting on inflation, but it's equally the case that central banks are looking, because the Fed said as much, that they want to put demand lower. They want to put in an equilibrium in the economy. So they are looking at growth data as much as inflation data, I think. So as long as growth holds up, I don't think they will stop, or at least they will not start to cut rates unless we go several quarters into a real recession. The recession is there. There's no doubt about it. People feel the pinch about everything. But then, as you say, data still show us that they are coping with it. So for me, it's far too early to talk about it, people.
Yeah, exactly. Exactly one point as well. So and speaking on the data, we had some fun and games this morning with the Eurozone CPI. Came out about 10 minutes early, leaked on Bloomberg. Unfortunately, it was the final number where, not exactly market moving unless there was a big variation, of which there wasn't. But so much for embargo data. It all came out early, and then 5 minutes after that, Reuters pumped the numbers as well. So we got all that data early. As mentioned, the data later on today, we've got the Philly Fed manufacturing, jobless claims as well. How were the jobless claims over the last 2 weeks, if you recall, Kay? We're keeping an eye on that.
They continue to gradually go up, but it's like a very, very well. You see, we've since May really starting to creep up, and we are back at this 250 line, which is a bit of a chart point. Let's put it that way in the jobless claims. So we do have to look at them, because they are likely telling us what is really going on. because we see the NFPs come out better, but then it's a lot of times the same people taking second and third jobs. So it's a bit of a difficult one to judge. But looking at the claims, we should sooner or later see the unemployment rate start to creep up. Just my 2 cents, of course.
Yeah, I think if we get up around the 400,000s, you know, just looking at the 4-week average basis, that's potentially when we're going to start to see it impacting. But you know, as we've seen, you know, quite clearly there from maybe the, you know, we were looking at from March, we've started this shallow trend higher. Yet we're still seeing strong numbers in the NFPs and the like. Although things like manufacturing, the PMIs, ISMs, empires have all been pointing to weaker strength. Let's call it weaker strength in unemployment and some contractions in some of the numbers. So keep an eye on those. If we start to see the PMI, all the PMIs and the regional numbers going into contraction in employment, and we continue to see jobless claims creeping higher, then as cases, it's going to be, you know, watching the clock to see when we start seeing that impact in the NFPs. It's a bit like the jobless claims is a bit like you looking at the NBA. You know, we saw back in early, you know, February, March, the problems arising in the NBA, and now here we are with the housing market, you know, going south. This is going to be similar for jobs. You know, watching the jobless claims, watching the PMIs, that sort of thing. So I do feel it's coming. If this trend, particularly here, continues climbing, as I get back over 400k, we might start to see some impact coming into the main NFP numbers like that. And that's why we watch this, the fundamental data, you know, because you do, if you watch some of these weekly numbers and some of the smaller data points, you can get the insight in that. You know, you can get the inside track and see where the trends are coming. You can extrapolate that forward to what may happen in the bigger numbers and the ones that, more importantly, move the market. So let's crack on. Oh, look at that. We've got existing home sales today as well. Another one to keep an eye on. And keep an eye on the price metrics in this number here, because that's the final domino I'm waiting to fall to see if prices start dropping in the housing market. We'll get that in existing home sales and new home sales. Right, so let's crack into some of the prices. But before we do, I just want to give a quick plug, obviously, to the ForexAnalytix platform, where you can come and join us and get all this wonderful insight every day, near enough 24/7. You know, myself, the K-Man, and all the other guys and girls are in the chat room. So, you know, you may get an hour here if you're watching the show to come and talk to us. You can come and talk to us all day long in the chat room there. If you want to come and have a look, go to forexflow.live/platform. I'll put that link in there for you. You can get an idea just of what's on offer on the platform there, what some of the community and our users think of it, all the features we've got there. And you can also grab a special offer. You can get 20% off your subscription as long as you hold that subscription. That discount will remain in place. Now, there is possible talk that some of our package prices may be going up at some point. It's under discussion. It's not something we want to do or do lightly. So keep that in mind. If you have been wondering about whether to join or not, it might be worth jumping sooner rather than later. One of the other things we've got going as well, if you don't know about, is our traders funding program, where we back you, or ForexAnalytix back you in a trading account. If you pass an assessment, you can get an account up to $1 million. Again, if you want to come and have a look, just come to this page. Again, I'll put the link in the chat for you quickly.
Did you say $1 billion?
Million.
Oh, okay. Because I'm going. If it's cheap, I'll sign up for the $1 billion account.
For the 1 billion, yeah, exactly. I'll have some of that as well if it was 1 billion.
Or make it a trillion, so I can be like the BlackRock's little cousin.
Yeah. Well, if you put it in Turkish lira, it's probably a couple of gazillion just on a 10k account. So. But yeah, I'll put the link in there if you want to come and have a look. See what all the good stuff that's offered there. It's good, particularly for US traders, because it gets you out of the FIFO rules. because, you know, as we know in America, it can be pretty restrictive there. You also get free access to the ForexAnalytix platform, depending on what account size you go for. So you get free access to the chat room where you can get the support from everyone in there. There's a dedicated chat room in there too. So that's the sales pitch. Let's get back to markets. Gonna have a look at dollar yen. Still struggling up at this 135, 50, 60 level. You know, it's getting a bit stuck up there. We have got the 200 MA there on the 4-hour chart coming in place as well. I'm not sure if we've got anything on the daily. Let's have a quick look. No, nothing too close on the daily, just messing around the 55. But as you can see there, we're not getting above it. It's getting to that point now where if we do break above there, we could see some further upside. Dips, as we said, over the FOMC minutes were bought up pretty well. Did have a little bit of a move lower in Asia again, but you know, as you come into the European morning, we've had a bid up there. The jobs data put a bit of a dent in Aussie dollar, but we seem to be playing a bit of big figure play in here. Got down to the big figure at 69, and again